screen recording on how exactly I plot my support and resistance, my supply and demand zones, my key levels, whatever you want to call them. This is the way that I do it, literally in the space of I'll say 5 minutes for the purpose of the video, but literally in 2 minutes. I go immediately straight to where price is exactly, and then I determine where the most recent support is. So we determine since it's a bearish movement, we'll determine the most recent resistance. We go there. That's our first key level where we're expecting volume to be in the market when price gets to this point. And we'll be expecting price to move down to the next key level, which we can just clone this. And the next key level for me will be the next support. Expecting that price will go somewhere to this point before another reaction comes out. So as it is, this is what we would define as the key levels exactly at these points, and we'll be expecting price to bounce off of these key levels and look for trades within these key levels. So the whole concept of key levels is not too complicated to understand, and that's the reason why I trade it exactly, because I don't have to think about it too much. I immediately know exactly where the key levels are, and from my knowledge and from my observation, almost 9 out of 10 times price is going to move in the direction of the key levels. So these are most likely the areas that most of the volume is coming in. Most of the traders are trading at these levels, and it also depends on the time that you decide to trade it. So if you decide to trade it in the Asian session, it's going to have less of an impact. If you decide to trade it at times where there's high volume, such as the London, the New York session, or the crossovers of the sessions, then the key levels will give you a much better area for you to actually pick out your patterns and execute trades. So the direction, most of the times, 9 out of 10 times, I'd say, it's going to follow the direction of the key levels, bouncing in between these two supports and resistance, and eventually you expect it to break out from one of those support and resistance to move on to the next key level. But for the purpose of this, to simplify it, we just put 2 key levels, meaning where price is playing at the moment and where we expect it to go. And that is simply key levels in a nutshell. Literally takes you 2 minutes to plot your key levels and you're already done. And from there you can now start zooming into the charts, knowing that these are the areas where volume and traders have been trading according to that day.